What's going on, guys? So in this video, I wanted to give an update on what's going on with the stock market and kind of go over what my thoughts are on the market and how I'm positioning myself accordingly. So if you guys are interested in any of that, make sure to stick around and let's jump into the video. So first off, kind of the biggest headline that was covered, across the board was that Cirrus Logic came out and said that they were cutting guidance. And with Cirrus Logic, for those of you that don't know, they're a semiconductor company that makes audio chips and audio codecs for the iPhones. And, as of the past couple of quarters, I think that they've made, 80+% of their revenue off of Apple. So realistically, Cirrus Logic is extremely dependent on Apple, and whatever happens to Apple, happens to Cirrus Logic. And so the way that the market took that is that Cirrus Logic cut their guidance by about 15% here. And so a lot of people have immediately priced that in to be like, okay, Apple is going to miss iPhone sales by about 15%. So you can see that the entire stock market was able to be brought down by this, or at least all the tech companies. So if you see any of the semiconductors that have anything to do with Apple, or even if they don't have anything to do with Apple, they're just in the space, everybody was hurting just off of this news alone, let alone the other news that I'm going to be getting into. This is something extremely big because, Apple being, I think now it's only about a $800 billion company. I say only, but this is some pretty good, pretty important news. And so with any of Apple's suppliers, and they've all been kind of hinting at it. Now we have actual evidence that okay, iPhone sales are going to be very weak. This kind of spells some bad news for the overall tech space, but it does kind of go back to the point that I've been making when I was talking about what's going on exactly with tech space and why I'm slowly reducing my risk out of it, and that is that because tech is slowing. Now you can obviously speculate on a lot of reasons as to why exactly tech is slowing, but honestly what I'm just going to assume what's going on right now is you have a couple of main drivers. The first one being, though, and the most important one in my opinion, is that the tech advances that have been happening while their prices have been, becoming a much, much higher premium. If you go back the past couple of years, look at phones, for example. Phones were, $600 not too long ago. Then they were $800, and now they're over $1,200. And there hasn't been a lot of innovation in the devices since then. And so you essentially have a device that has a tweak here, tweak there, that in large is just due to software updates that you can get even if you have the older devices, and there's no real wowing grab factor of new smartphones or just new tech in general right now. And so a lot of consumers, and consumers drive the economy, a lot of them are kind of whatever with the new phones and just with products across the board. Until these companies really start to re-innovate themselves and really start to add in features that are kind of mind-boggling, when the thumb scanner came out the first time, when Retina display came out the first time, when an OLED screen came out for the first time, all these hardware things that the end user can physically see and feel and interact differently with their device. That is something that will drive consumer spending much better than say a slightly different chassis, a new color, and a new software update that you can get with the old one anyways. Just to rebuy their phone that they just bought a year ago for $1,000 to rebuy it for $1,200 for realistically just a software update doesn't really make sense, at least in my opinion. And honestly, of the people that I've known that are getting new phones, they're actually getting a phone a year or two older now, because in all honesty, if you look at the, say on the Samsung line, if you look at the S8 Plus to the S9 Plus, there's not a lot of whole difference between those two. Yeah, the S9 Plus has a better camera, but that's about it. There's not much difference, but there's about a $300 price tag difference. So honestly, I don't see any need for from a consumer standpoint. I don't see any need to upgrade tech right now. And you've also seen it with Nvidia. Their latest cards weren't that amazing. I made multiple videos on Nvidia and kind of my dealing with them. I still think the company will be doing great, but beside the point, what they did, with their latest line at the RTX, it was all software things that the end consumer couldn't actually utilize right now. And so that's obviously going to slow down tech, and we're seeing it that it's not in just the hardware section, it's in the actual complete product section. And this is something that's kind of worrying. I do think that this will minus a recession, this will kind of, revert itself, by the second half of next year, because the semiconductor companies are all coming out with actual innovative devices, supposedly, by them. But it'll be really interesting. Tech, is slowing, and it doesn't seem like right now that it's going to be that great of a, next couple of quarters. Now, obviously, so this leads, two different camps. You can have the people that are currently holding on to tech that, in my opinion, the glory days of what happened the past couple of years are going to be done, at least for the short term, and tech's going to get hammered because of it. However, if you're not currently invested in tech, this may or may not be the beginning of your very slow entry into the space. So obviously, the majority of tech companies, if you've just held on to tech companies, you've destroyed the average stock market return that you should normally expect, multiple times over. So like me, I've been averaging, 25 or 30% the past 3.5 years. My first couple of years were kind of whatever, but once I started really focusing on just tech, really exploded the amount of returns I was getting. And honestly, I think it was just luck. I think that the luck from this space, it was a perfect storm for tech, as I've said over and over again, but that perfect storm is dying down, and I don't think that growth is going to be back, at least for a while. I'd give it about a year minimum, to be honest. And that's just my opinion. Okay, obviously you guys have all different opinions, but this is just kind of like a hard, evidence that, okay, that is happening. Tech is slowing down. If you're in it, me personally, I'm not getting out of it, but I'm reducing my exposure to it. But if I had no exposure to tech right now, it might be pretty attractive. Apple right now is, well, I haven't started a position yet in it, because I want it to come down a lot more before I really buy a company that I hate their products. But if I had no exposure to tech right now, I think right now would be the beginning of a slow, introduction into the space. That's just my opinion. Take with it what you will. Another thing I want to talk about is the G20 Summit. So obviously, Trump and President Xi are, they kind of had their little spat, and now they have kind of agreed on nothing, essentially. But they have agreed on, keeping on a 10% tariff, for the next couple of months, not doing any further tariffs until they revisit the issue, I believe in February. And overall, I think that this is a relatively optimistic thing to have happen, because obviously, a lot of people were expecting Trump to say, okay, I'm going to throw down a 25% tariff. Goodbye, Chinese economy. Goodbye, everything. So obviously that didn't happen. Some people were expecting them to just say cancel all tariffs, which I thought was a little too, optimistic. I don't think that really was feasible. This issue makes sense from both sides of the spectrum. So like, it's a very complicated issue. And it's not going to be done, like, easily. You can say Jack Ma said that it wasn't going to be done for, over a decade. Who knows exactly what's going to be happening. I personally don't think it'll take over a decade, but pretty interesting. You saw Chinese stocks rally, and up until the news with Apple, they kind of stayed rallied. But then when Apple went down, the majority of all indexes, regardless of if they had anything to do with Apple or not, went down. Now that brings me into my last point that I want to make, and that is U.S. Yield curves have finally started to invert. Now, so this has kind of been, like the little quiet choir in the background for, the past year or so, and that yield curves are kind of getting at the inflection point. And once they start inverting, it's going to get very ugly in the stock market. And now they have finally started to invert. Essentially what a yield curve inversion means is that bond investors that, take out a shorter time period in their current yield, for this one, for example, they say if you want to buy a 3-year bond, you're going to get a better reward than, say, someone that buys a 5-year bond. So essentially, no one will want to buy a 5-year bond because they have a better risk premium on a, shorter time horizon. So this is pretty dangerous because that means that a lot of money in the bond market can start to get shuffled around. However, it is should be noted that this is, the 3 and the 5 year. And the big yield inversion that everybody's waiting for is the 2 and the 10 year. The 3 and the 5 year bonds, they invert, not as frequently as a recession. They invert more frequently than, say, a 2 and a 10 year. I'll say that. But they're normally, anytime that yields start to invert, generally means that you're towards the end of a business cycle. So, you never see the, the inversion happen, right out of a bear market or right into a recovery. So this kind of is another indicator that, okay, things are slowing down right now. No one can say that they're not. And with the Federal Reserve, they just halted rate hikes, but with the anticipation that they're going to be doing that more so in the future, things will probably get pretty ugly in the bond market, in the next year or so. So this is something that I think this is probably the most fundamental, news thing that came out, but obviously everybody was focused on what was going on with Apple. this is something that I think could actually shake markets, especially if it continues and it spreads onto the other yield curves start to invert. So this is kind of the big leading indicator that what I've been trying to harp on for the past couple of weeks is that, okay, we're going to be slowing down for right now. The stock market is slowing. I know some channels for some reason still see that, the growth is not slowing down. I don't know what numbers they're looking at, but in my opinion, growth is definitely slowing down, and you should adjust accordingly. That's the end of the day. Do I think that the market isn't going to, rally again? No. Do I think I have any ability to guess if the market's going to rally again? No. I'm just looking at, things that I'm looking at, with a couple year time horizon, which is a little bit longer than the market's, trading. I'm going for a more, safer approach to the market right now. And then once things start to look terrible, then I'll start to be more aggressive, with investing in, high returning based companies. But for right now, I'm still sticking with what I came out in the other video about the 3 stocks I was watching in December. I'm keeping on with that opinion of what's going on with the market. Now, so that's enough of the stock market, and if you guys were only here for that, you can check out right now. But I did want to kind of do a brief touch upon what's going on with the channel's portfolio. And so I switched from using Yahoo Finance to Google Sheets, and that's mainly because I can't really catalog trades or anything on Yahoo Finance like I can here. And since this is going to be a quote-unquote active managed portfolio, I might as well, really, start to figure out a way that I can catalog things. So, if you guys have followed my Instagram, though, I did talk about how I sold out of AMD, and thankfully, AMD dropped, I think, it rallied 12% in a day. And you guys know I don't like it when semiconductors rally more than 8% a day. And I have sold out a few times now. I've sold out a few times now because of that, especially in the tech sector, because I think a lot of it becomes momentum-based trading, and that's not why I'm in the company. So I'm not going to turn my long investment idea or even my swing trade, as I said AMD was going to be, and turn that into a momentum play just because things are looking good. No. So I did sell out. Thankfully, it was right. And I will say that also what happened during this, and what kind of, for those of you, because I didn't, put this on YouTube, and you're going to say, oh, he's just, sugarcoating his numbers. If you look at the AMD's moving averages, it did hit, I believe it's 50-day moving average at the close of Monday. So, and that was something that I've, exited many a times off of, was because a company banked, hit off of a moving average. And, while I'm not a full-on technical trader, I do pay attention to technicals, and I give them some pretty decent weight. Moving averages anyways, not really all the other things. And so thankfully that was right. I did add some Altria because of very interesting news that when I do the Altria video, that'll be coming out relatively soon, I'll definitely go into that. Altria is just looking more and more attractive to me by the minute. And I think it's going to be a great, investment over the next 3-5 years. Between its dividend, its growth that it's trying to be focused in on its new sectors, and, the current discounting and the current chaos that's going on in the market, I think Altria is a really good, position to have, at least going forward. Whether it's a small position or not, I think it's just going to be a good rock in someone's portfolio. So that was kind of it. Obviously the markets were down horribly, like I said earlier. That was kind of it. I just want to give you guys an update on what's going on in the markets and then what's going on with the channel's portfolio. I'll be doing an in-depth video on Altria next. That's going to be my next video. Let me know if you guys have stuck to the end of the video. You guys are obviously the ones that actually pay attention to everything that I say. So if you've done this, let me know in the comment section down below if you guys want, say, the analyzation up done on here. I can do it through a spreadsheet and I can kind of, work my way that way, and be the numbers focused. Or would you rather me go over to the whiteboard and kind of, do what I did with like Starbucks and, kind of write out and then give a monologue approach to the, the thesis that is my investment philosophy. So if you guys want to do that, let me know. I don't know which one I'm going to be doing yet, but if you guys, tell me that you want one more than the other, I'll definitely do it. So that's it. Thank you guys for watching. Hope you guys got some use out of this. Let me know what you guys think about the markets in the comment section down below, and I'll catch you guys in the next video. Peace.